Good afternoon. Welcome to Kenya News Update today. We begin with a story rippling through global financial markets. Bitcoin, the world's largest cryptocurrency, has extended its decline, tumbling more than 5% to fall below the $63,000 mark. This significant drop, happening on Tuesday, reflects what analysts are calling tactical de-risking by investors. The digital asset fell to as low as $62,964.64, a stark retreat from recent highs. The sell-off is being attributed to escalating global tariff tensions and broader geopolitical uncertainties. For a market that often trades on sentiment, these macro headwinds are proving to be a powerful force. This is a deep dive analysis of what's driving the crypto crash, its implications, and the debate surrounding Bitcoin's volatile nature. I'm your host, and we have a full panel of perspectives for you today. First, let's break down the numbers. Bitcoin's price action today tells a clear story of pressure. The drop of over 5% is substantial, but it's part of a larger narrative. To understand the magnitude, we need context. Bitcoin's all-time high, reached in late 2024, was just over $125,000. From that peak, today's price represents a decline of roughly 50%. However, compared to its price at the start of 2025, which was around $45,000, it's still up significantly. This volatility is the hallmark of cryptocurrency markets. The immediate trigger appears to be renewed trade war rhetoric, with President Donald Trump's administration reportedly considering a new wave of tariffs on Chinese goods. Traditional markets have grown jittery. This fear has spilled over into the crypto sphere. Investors are moving capital into perceived safe haven assets like the US dollar and gold, pulling money out of riskier bets like tech stocks and digital currencies. It's a classic flight to safety. But is this just a short-term correction or the start of a deeper bear market? We have two experts with us today to debate that very question. First, joining us remotely from London is Michael Chen, a senior crypto analyst at Digital Asset Advisors. Michael, you've been calling for caution. What's your read on this sell-off? Michael Chen, good afternoon. This is more than just a blip. We are seeing a confluence of negative factors. The 5% drop is significant, but the trading volume behind it is even more telling. There's real de-risking happening. Institutional investors, who entered the market in a big way over the last 2 years, are now reassessing their exposure. Geopolitical risk, regulatory uncertainty, and the simple fact that Bitcoin has had an incredible run, it's a recipe for profit-taking. I believe we could see a test of the $55,000 support level in the coming weeks if these macro pressures persist. Thank you, Michael. A cautious outlook indeed. Now, for a contrasting view, we have Aisha Mwangi, a blockchain entrepreneur and founder of Narrow Bit Labs, joining us from our Nairobi studio. Aisha, you're known as a Bitcoin bull. Is this just noise in a long-term uptrend? Aisha Mwangi, absolutely. Good afternoon. What we're seeing is healthy volatility, not a crisis. Bitcoin is a nascent, global, decentralized asset. It reacts to global news. A 5% move, while headline grabbing, is within normal parameters for this asset class. The fundamentals have not changed. Adoption continues. The network is secure. And crucially, the long-term narrative of digital scarcity and a hedge against fiat currency debasement remains intact. This is a buying opportunity for those with a long-term horizon. The dip below $63,000 is a chance to accumulate, not a reason to panic. The debate between short-term risk and long-term conviction is at the heart of crypto investing. Let's add another layer to this: regulation and real-world usage. Bitcoin, invented in 2008 by the pseudonymous Satoshi Nakamoto, was envisioned as electronic cash. But its journey as a currency has been rocky. Perhaps the most famous experiment was in El Salvador. From 2021 to 2025, the country adopted Bitcoin as legal tender alongside the US dollar. It was a bold move championed by then-President Nayib Bukele. The experiment was closely watched globally. Proponents argued it would boost financial inclusion and attract investment. Critics warned of extreme volatility and implementation challenges. In early 2025, the newly elected government revoked Bitcoin's legal tender status, citing the very volatility we're discussing today and complexities for everyday commerce. The experiment showed the difficulty of using a highly volatile asset for daily transactions like buying bread or paying taxes. This historical context is crucial. It highlights a central tension. Is Bitcoin primarily a speculative investment asset, a digital gold, or is it meant to be a usable currency? The El Salvador case suggests that, for now, its primary use case in the economy is as an investment and store of value, not a medium of exchange. This brings us to another critical angle: the perception of Bitcoin in the mainstream and its association with illicit activity. Because Bitcoin transactions are pseudonymous, not fully anonymous, but difficult to trace, it has been used by criminal elements. This has attracted significant attention from regulators worldwide. Just this week, a story emerged from South Africa that, while not directly related to Bitcoin's price, feeds into the broader narrative of high-profile individuals and controversy. Bellarmine Chatunga Mugabe, the son of the late Zimbabwean President Robert Mugabe, was charged in Johannesburg with attempted murder, theft, and being an illegal immigrant. The alleged shooting incident happened on February 19th. Mugabe, known for a lavish lifestyle, appeared in court on Monday. This story, while a separate legal matter, resonates in the crypto world because figures associated with wealth, controversy, and cross-border finance often intersect with digital assets. It reinforces the regulatory scrutiny that hangs over the entire sector. Stricter know your customer laws and anti-money laundering rules are being applied to crypto exchanges, adding compliance costs and potentially cooling institutional enthusiasm. Now, let's visualize some of the key statistics we've discussed to better understand the scale of today's move and Bitcoin's historical context. The first chart shows today's price action against key psychological levels. We see the drop from above $66,000 to below $63,000, a clear breach of support. The next visual is a comparison of Bitcoin's current price to its all-time high and its price at the start of President Trump's current term. This illustrates both the steep decline from the peak and the substantial gains from the beginning of the political cycle. The third chart breaks down the percentage decline. A 5% single-day drop is severe, but it's worth noting that Bitcoin has experienced over 20 separate days with declines of 10% or more since its inception. Volatility is baked in. Finally, let's look at a timeline of key regulatory and adoption events, from the Satoshi white paper to El Salvador's adoption and subsequent revocation, to the current regulatory climate under the Trump administration. This timeline shows the ongoing struggle between innovation, adoption, and control. Back to our debate. Michael Chen, given this regulatory and geopolitical backdrop, what is the single biggest risk to Bitcoin's price in the next quarter? Michael Chen, without a doubt, it's the regulatory crackdown in the United States. The SEC under the Trump administration has taken a more aggressive stance. If we see a major enforcement action against a large exchange or a clear move to classify most cryptocurrencies as securities, it could trigger a liquidity crisis and a drop far steeper than 5%. The market is pricing in a certain level of regulatory tolerance. If that assumption is wrong, the downside is massive. Aisha M1G, your rebuttal? Aisha M1G, regulation is a risk, but it's also a path to legitimacy. Clear rules, even strict ones, are better than uncertainty. The biggest risk isn't regulation, it's a failure of the network itself, a major security breach. That hasn't happened. Bitcoin's proof of work has proven incredibly resilient for over 15 years. The price will fluctuate, but the protocol is robust. The long-term trend is adoption, and short-term regulatory hurdles are part of that maturation process. So where does this leave the average investor or observer in Kenya and across Africa? Cryptocurrency adoption has grown on the continent, often driven by youth, tech savviness, and in some cases, a need to hedge against local currency instability. The Central Bank of Kenya has maintained a cautious stance, warning the public about the risks. Yet peer-to-peer trading volumes remain significant. The current price drop is a stark reminder of those risks. An investment that can lose 5% of its value in hours is not for the faint of heart or for money you can't afford to lose. However, proponents argue that for those who believe in the long-term technology, periods of fear are the best times to build a position. It's the ultimate test of conviction. As we wrap up, let's consider the global picture. The world is facing a potential shift towards protectionist trade policies, rising tensions between major powers, and ongoing conflicts. In such an environment, all risk assets are under the microscope. Bitcoin, often touted as digital gold or an uncorrelated asset, is proving to be highly correlated to global risk sentiment. When investors flee stocks, they often flee crypto too. This challenges one of the core investment theses for Bitcoin. Yet its proponents counter that this correlation is temporary and that in a true crisis of confidence in fiat currencies, Bitcoin's inherent properties, its fixed supply of 21 million coins, its decentralization, will shine through. The debate is far from settled. Today's price action is just the latest chapter. In summary, Bitcoin's sharp decline below $63,000 is a multifaceted event. It is driven by immediate geopolitical fears, ongoing regulatory uncertainty, and the asset's own inherent volatility. It serves as a real-time case study in the clash between a disruptive new technology and the old forces of global finance and geopolitics. Whether this is a buying opportunity or a warning sign depends entirely on your time horizon and risk appetite. One thing is certain, the world is watching. For Kenya News Update today, this has been a deep dive into the crypto sell-off. We thank our guests, Michael Chen and Aisha M1G, for their insights. Remember to conduct your own research and understand the risks before investing in any asset class. Subscribe to Kenya News Update today for more in-depth analysis of the stories shaping your world. Good afternoon.